Post a stellar 10 times uptick in revenue in Q1, Kilpest India continued the strong performance in Q2 with revenue nearly doubling sequentially, and a strong margin expansion was also witnessed. In our ideas for profit today, we'll discuss if there is an opportunity beyond COVID-19 for Kilpest India and its investors. Well, Kilpest operates in two major verticals of agrochemicals and diagnostic kits. The agriculture segment focuses on the crop protection products, both chemical-based and biological. Now, the diagnostic kits segment focuses on the molecular diagnostics, nutrigenomics, and also personalized medicine. Now, 3B Black Bio Biotech, which is a subsidiary of Kilpest India, had been approved by the ICMR for the production of the real-time PCR detection kits for COVID-19 back in April 2020. Post this approval, the company was able to bag many orders for the supply of these test kits, which actually enabled a bumper growth in H1 of FY21. Now, the government orders and also the lifting of export restrictions definitely benefit Q2 FY21 as well. The strength in the numbers is majorly on the back of the higher demand for COVID-19 testing kits, and that is globally. Now, given the current virus spread and the testing trends, we expect FY21 to be very strong year for the company going forward even as well. The current profits give the company a strong liquidity cushion to diversify and also expand into different verticals. Now, Kilpest produces RT-PCR kits which have actually given high accuracy test results as well, and given this, they also saw strong demand. Kilpest has already sold more than 47 lakh testing kits until October. The agrochemical segment has also started reporting a decent performance with the uptick both in the revenue and margins as well. However, the major focus in the near term is expected to remain on the diagnostic segment, as the agri segment of the company remains volatile for now. Now, while with the introduction of the vaccines all across the world, the demand is expected to gradually slow down. Given the accuracy, these tests are still expected to remain a preferred choice over others. Moreover, with the news of new virus strain in the UK, testing might also see a surge yet again. However, there are threats of competition from other PCR testing companies and also the new low-cost, high-accuracy technologies as well. Now, given the high margins and the huge demand, this segment is definitely under the scanner by most major players who can produce at better economies and also capture the market rapidly. So that's the risk that you need to really look at going forward. However, we do believe the growth from COVID test kits would eventually start fading in FY22. Given the current growth, which is creating a substantial liquidity cushion for the company, and how this company channelizes this growth or the driving of this growth factor going forward is something that we'll have to really look at. Definitely the diagnostic segments, the growth in that could actually get demerged somewhere later and unlock more value. The near-term outlook for the company remains quite positive. However, the longer-term growth would depend largely on how the company really channelizes its current earnings for the expansion going forward and for the overall growth of the company. Now, post a strong rally, the stock has already seen a substantial correction in the last few months and is currently trading at 42% below the 52-week high levels. At the current market prices and with conservative estimates, the stock is trading at an FY22 estimated PE of around 10 times. Now, while the valuations are quite cheaper when you compare it with the other large diagnostic companies, the risks are also high here. So investors should keep these factors in mind before taking an investment call on this stock. Now, amidst the current correction, investors can definitely wait for better prices to accumulate this stock if they want to play it for the long term.